One of the first questions I ask aspiring business owners isn't about their business idea, isn't about their credit score, it's not even about their income. I ask one simple question. Do you have a 401k? Because after 15 years in banking, serving small business clients, I've seen people overlook one of the most powerful financial tools that they already own. Most financial content, funding and lending related content for business owners and entrepreneurs tends to give you more complex structures and strategies or products that you need to position yourself or to qualify for funding. I'm going to be going over in this video one of the most common financial tools most of you as business owners and entrepreneurs are sleeping on that can serve you in so many ways, whether it's positioning you for funding, helping you to actually qualify and get approved, or actually being used in itself as a funding tool for your business when you're getting it off the ground or trying to stabilize it. So for those of you who are new, welcome to the invitation. For my returning viewers, welcome back. I'm going to be your business banker and your capital strategist going forward. So let's look at some of the initial things that we need to talk about when we're discussing the 401k as a financial tool, as a business owner or entrepreneur, when it comes to positioning yourself for capital. So one of the big reasons why this matters is going to be many aspiring entrepreneurs believe they have no access to capital, when in reality, they may already have an asset that can strengthen their funding strategy. This is why this is important, all right? So why as bankers do we care about assets? Let's peel this back for a second, all right? Because I know many of you may be sitting up there wondering, first off, what's the connection? But second off, why does it matter so much what assets you may already have, all right? So I'm gonna give you a little bit of context around that for a second. Banks look at the entire financial picture, believe it or not. I know there's a lot of content out here that's encouraging this idea that you can walk off, create an LLC, walk into the bank with your EIN and your LLC and follow these certain strategies and steps and get, no personal guarantor, business funding, etc. I want to be the first to dispel, in many cases, that's not how that really works. We are looking at the entire financial picture of the owner and the business, looking at the demographics of the owner and the business. So it is important for you to understand why you having personal assets, the right personal assets, can position you for great results when it comes to business lending requests. So assets can demonstrate a few things: financial stability, reserves, net worth, ability to absorb unexpected expenses that can often change the risk profile of an applicant. All right. So it's important. 4 ways a 401k can help. Pay attention here, because a lot of you probably don't know at least one, if not most, of these bullet points. So it strengthens your overall financial position. Lenders often consider the broader financial picture, not just income. Having meaningful retirement savings can make you appear financially stronger. The second point serves as a financial reserve. This is one a lot of people miss as well. Many business owners deplete every dollar they have. Keeping reserves available often puts borrowers in a stronger position. The third, 401k loan feature. A lot of you may know this exists, but you're a bit confused on how it works. So many employer-sponsored plans allow participants to borrow against their vested balances. I am not a tax professional. I am not a fiduciary managing your 401k, so do your own research on this. But I'm going to give you some highlights, again, as a business banker and a capital strategist, on how you can potentially do this, all right? So the common borrowing limits for this are usually going to be between half of the vested balance you have in there or 50,000 as a ceiling, whichever one of the two is the lowest, all right? So that's commonly the case. Is if you have a $200,000 401k, half is 100,000. So what it basically means is 50,000 is going to be your cap. Conversely, if you have a 401k that's only 45,000 in total, then you're going to be able to borrow somewhere in the neighborhood of 23,000 of it, give or take, right? So that's common borrowing limits. The next is repayment through payroll. This is a good thing because it's automatically drafted through your payroll check, and it all pretty much goes back into your 401k with a minimal amount of it going by interest. So you're largely repaying your own investment account, your own retirement account. And that's a beautiful thing. Another pro to this is going to be there's usually no credit check for this and minimal documentation. You already have the assets secure, the collateral. The money's already vested. The structure's already there. They just need you to sign off on a couple of documents. And typically speaking, you're able to get access to those funds in a short window of time without underwriting, without credit checks. That's great. Potential risk. Clearly, if you fumble to pay this back, there could be tax implications. and other problems. So you want to avoid that the best you can. So do your homework on other risks that could be associated, but that's an immediate one. If for whatever reasons you can't pay this back, and I know they're drafting it out of your payroll, ideally, if you leave the job prematurely and they can't, they may want the whole amount that you owe due at that time. It may no longer be a payment plan. So just do your research on that. What happens if unemployment ends? So I just talked about that. You want to be mindful if you're no longer working there and they have the ability to just draft out of your payroll check, how they're going to treat that loan debt from that point in time. So do your research. The fourth is other specialized funding strategies. This is where it gets creative and exciting. This is where the capital strategist part, you may be scratching your head if you're new to that, comes into play, where a lending professional like myself finds creative, innovative ways to stack various forms of capital to help you access various forms of capital to meet your needs. All right. So there are specialized structures that may allow retirement assets to help fund a business under specific rules. These are more complex and should be evaluated carefully with a qualified professional. This shows you that the possibility, it shows you the possibility without oversimplifying things. All right. So what I want to basically say with that is you can potentially use your retirement assets as collateral, pending the circumstances, the rules and the terms and where things are situated for you with another lender. Okay. And so this can open a lot of doors for you, especially for that initial capital. This isn't a strategy you're probably going to want to tap into if you're a well-established business and have the ability to go get lines of credit and loans. But a lot of my business owners who are new or early on, in the building phase, the fundamental building phase, or even in the conceptual phase that need that capital, this strategy can work out really well for you if you got the right guidance and you know the rules and regulations. All right. So let's talk about a quick caveat on when not to use this. All right. Don't jeopardize your retirement savings without a sound business plan. Let me double down on that. Don't jeopardize your retirement savings without a sound business plan. All right. Emergency reserves, that is what it's going to be viewed as, but it is not ideal for you to go in there for that. Realistic projections. Make sure that whatever it is you're planning to do when you acquire these funds, it is realistic as possible. You're going to accomplish that goal financially and be able to handle the repayment. Business viability. Make sure you got something solid that you're trying to go in business for. This one is big because I got a lot of idealists that I encounter as a business banker. And I can't tell you enough how much I hear business owners that have really interesting concepts and ideas of business, of going into business that aren't really viable or realistic. So please try to curve back from being one of those people, especially if you're going to borrow from your retirement account to fund it. Understanding the risk. Do your due diligence, contact your fiduciary or whatever company is, holding your 401k. And your HR department, do your due diligence, but this is a phenomenal tool if all the boxes are checked and you minimize your risk. So from a banker perspective, as a business banker, I don't just look at credit scores. You hear that a lot on my channel, you know that. I'm looking at your entire financial picture. And sometimes the biggest opportunity isn't funding new money. It's understanding the assets you already have, okay? So before assuming you can't afford to start a business, take inventory of the financial tools available to you. One conversation with the right banker could completely change your funding strategy. So I want you to comment down below, and I want you to comment business banking strategies. Business banking strategies, because this is the creativity that is available if you get the right capital strategist in your corner. You can start uncovering tools that are right under your nose, even if you're not positioned for capital in any other way. Think about that for a second. You need that first 15, 20, 25, 30, 40, $50,000 in capital to get whatever it is off the ground or stabilize what you've already started. This can be a phenomenal tool that's right under your nose. And another reason I'll close out saying as well, why I love the fact that I built my career and foundation under consumer banking, because I learned so much about financial tools that everyday consumers or the everyday person, the everyday working person has that they don't even realize is a financial tool that can be of use going into their entrepreneurial journey. So comment business banking strategies down below. Let me know you locked in and got all of the value out of this relatively short but jam-packed video. Like, comment, share, subscribe, support the channel so the channel can continue supporting you. Those of you who are new and have not already, get familiar with me. Get in the description section down below to learn more about me. This channel is actually named after my first book, The Invitation, Bridging Banking, Credit, and Capital. This channel is literally derived and birthed from that book. So I want you guys to get in the description section again, get more details, but tap in with the book. It's a phenomenal read. It's great if you're looking for introductory understanding on how the financial system and banking system works, how capital works, how qualifying for it works, the relationship with the banking system, etc. Those of you who also want to get to know me better as a financial professional, my career and background, so you know where you're getting this information from, go to the About section on the channel. I have a little bit of details about my career in a nutshell, so you can know that you're getting this from somebody who actually has been doing this for years, over a decade and a half, in the field with real clientele and real lending requests, real clients. So get in the About section if you want to learn more about me there. Other than that, I appreciate every single one of you tuning in and investing in yourself. I want you to stay focused, stay in motion, and I'll see y'all soon.